Good evening, guys. JR with Secure Metals Exchange, bringing you your technical update here for December 23rd, 2012. It's approximately 4:29 p.m. Eastern Standard Time. Today is Sundays, guys. The market is closed. I just wanted to get this quick analysis here out before the week starts. And as we can see here on the daily chart, we've been trading here in quite a range here for the last year and a half. We've managed to test this resistance band here at 1790 three times in the last year. And last time was in early October, October 5th, actually, October 4th. We saw the high of 1695. We came back down here to 1675. Try to go higher, but we were not able to sustain this rally here. As of right now, we've created a new low and we've created a lower high, which is a classic case when you look at a downtrend. But I do expect this downtrend not to continue here for too long. The fundamentals are way too strong. We're printing $85 billion. Really, at this point, what I would suggest is, just continue to average your price, lower your average price. Because at 1634, I personally really like this market. I'm hoping that this market is going to hold really a confluence of support. So when you look at this line here, this line is a very significant line here at 1634. Again, we touched that line, and right now we're back up to 1657. I would expect in the short term to at least shoot for 1670 before we continue to go higher. And the goal here, at least for the short term or the medium term, is to surpass the 1750 range, so we can break this lower highs and lower lows. Okay, so once we go above 1750, the new target will be the previous high of 1790. But again, with the near coming up, the fiscal cliff coming up, $85 billion in mortgage-backed securities that these guys are purchasing, I do expect a lot of volatility here. But so as long as we're being careful, I definitely love these all this price. Any price below 1650, all the way down to 1588. I don't personally think it's going to go down that far, but who knows? As of right now, the weekly chart, we almost touched support at the 100-day moving average at 1633, and again, your stochastics are also oversold here on the weekly as well. So I think from here on out, all additional dips will be very well supported. What we don't want to necessarily do is fall below the 1635 band here. Okay, that would expose a possible 1531. All right, that's your gold chart as of right now. Again, we're on top. We're below all moving averages, so we still have a bit of a ways to go here before we can continue to go higher. But again, based on the fundamentals, $85 billion that we're printing, I don't necessarily see how we're going to hold up at these levels. I would think these levels are going to be very well supported. If we look at silver here, same story for silver here. Silver's created a new low, a lower low here, and a lower high over here. So as of right now, we do have stochastics completely oversold. So we do expect the prices to head higher from here. Again, fiscal cliff is coming up, so there's a lot of uncertainty. I would just, again, not go too crazy, and you should be all right. Ultimately, we are looking at much higher prices. I would look to test the $35 before February or before March. I would look to test this at least this $35 band, possibly even the $37 band here as well. That's on the daily chart. So again, pretty oversold on the daily chart. If we look at the weekly chart here, and again, also below all major moving averages. On the weekly chart, it does suggest that we might continue to go down a bit further. You have a big bearish candle here. So again, this might extend down to 2868. But again, I do expect the prices from at least from this level not to go down too much further than where we are right now. Okay, guys? Guys, a lot of volatility here. I do expect a lot of volatility here for the next 3 to 4 or 5 months. I do expect higher prices, however, and again, when you calculate the current fundamentals plus the current technicals, I mean, they're both looking to go higher. If we look at this ratio, this is something I normally don't show either, but this is a ratio chart. This basically compares the price, how many ounces of silver you can purchase with 1 ounce of gold. Right now we're at 55, anytime we're at the above $55 range, you would expect a pullback. When this goes up, the metals usually go down, and when this goes down, the metal usually goes up. So as of right now, on the stochastics, on the ratios, is actually overbought. So again, we should see this. These ratios start to decline, and again, as these ratios decline, then we will expect higher prices on all metals, on all the metals. Okay. As a matter of fact, I will give you a quick demonstration of how this is true. So this is your overlay. So this red line is your gold prices, and obviously this is the ratio which we were just talking about. So as you can see, they really work in opposite. So whenever this goes down, this goes up, and this is where we are right now. The gold is trading right here, and the ratios are up here. So we do expect these to cross again, and the metals to head higher, as well as the ratios to head lower. That should be very bullish for the metals as well. So again, oversold on that area as well. Okay. So again, on the technical side and on the fundamental side, I do expect much higher prices here for the new year 2013. I do expect, however, a lot of volatility. So as long as you're being careful, you should be okay. Again, as of right now, this is what we're testing, the 55.19. I would think that we would probably test if prices continue to decline and the ratios continue to go higher. I would probably expect 57 to hold before we head higher. This has moved up way too fast and without too many reasons. There's really no reasons why the metal should be at these prices, especially when you consider quantitative easing, which they've announced 85 billion until unemployment reaches 6.5. I don't see how that's going to happen. Employers are getting ready for Obamacare, higher taxes, which basically means that we should start letting people go out of the workforce. So if anything, I do expect unemployment to go higher within the next few months. Guys, last few days of the year, good luck. Don't go too crazy out there. Happy holidays, Merry Christmas, and all the luck for 2013. Good night.